Hello to everybody, our dear subscribers. FutureTrend channel is back to you, and today is 10th of July 2019. Very important day because today is the day of Jerome Powell testifying before the House of Representatives Committee. And of course, in the current environment, this kind of appearance of the Fed's chief could be very crucial for the currency market as well as for the other segments of the world financial society. Let's discuss during next 10 minutes about the possible ramifications, possible echoes, let's say, of this appearance of this testify. We should understand that market at the moment is more or less fully priced in a possible rate cut at the next Federal Open Market Committee meeting that's scheduled for the end of July. But we suggest that taking into account how strong is the United States dollar at the moment, it's probably the market already starts to reposition itself, probably expecting a no cut during next Federal Open Market Committee meeting. And that's because of the quite good numbers we have in the form of stellar non-farm payrolls report from last Friday. We anyway suggest that now the Fed's chief is in the position of, let's say, probably very awkward position. And that's, first of all, because of the Trump's attacks on the Fed's independence, desire of the United States president to dismiss the Fed's chief and to change him to another one, probably more loyal for further cuts of the interest rate in the United States. We suggest that, of course, the Powell will try to defend its position and to defend the independence of the United States Central Bank. And a lot of questions should be associated with this topic. Anyway, of course, he will try to explain the current situation, economic situation in the United States, in the whole world, as well as the trade difficulties the United States is still facing because of a no deal between the two economic superpowers, China and the United States. Altogether, we suggest that despite of the stellar performance of the labor market in the United States, taking into account the global uncertainties with the global economy, taking into account that still we don't have a real kind of trading agreement between the United States and China, and also taking into account the inflation situation in the United States, because we should understand that inflation level in the United States still remains depressed. And the last United States labor report also confirmed such a negative picture. As you know, the average hourly earnings went in below expectations, came in below expectations. Altogether, we are in favor of insurance rate, so-called insurance rate cut at the July meeting. That should probably stop the current advance of the United States dollar to the upside. Any kind of hints to a more aggressive easing policy, which is probably not so real at the moment, we suggest that, of course, the United States dollar could react much stronger to the downside. But also we also need to be ready for a possible upside surprise from the part of the United States central banker, if, for example, he will decide in favor of no deal. So probably it's time to wait a little bit before taking any kind of new positions in the market. So now probably it's time to wait and see, and that's why we are first of all have a kind of tight stop losses for existing positions. As you could see in the major currencies, we don't have any positions in the euro dollar or in the dollar Swiss. We prefer to stand aside for a while. The same applies, by the way, for the sterling, but sterling itself has a lot of its own problems associated with the shrinking British economy or still political doldrums. Altogether, let's see the charts. For example, the chart of the euro dollar. We should acknowledge that there is stronger support around the lows of this year, located around 111, 111.10, and for sure this level should be a kind of reliable support at the moment for the euro dollar. Anyway, as we still prefer to have the same point of view as, for example, the Commerzbank analytics have at the moment, we suggest that sooner or later the United States dollar will start to depreciate. That's why probably from a longer term point of view, any kind of move to this level of 111 should give you opportunity for a small buy, let's say, in the euro dollar. Of course, taking into account that probably the Europe economy will start to recover, or the United States economy could go in the deeper, let's say, in the deeper waters. I mean that the economic situation will further deteriorate in the United States. Let's understand also that there is a kind of important downside trend line located around the level of 115, a kind of crucial resistance barrier for the euro dollar at the moment, together with the moving average 200 daily line located now at 113.25. The same applies, by the way, for the dollar yen, which is still below the level of 109, and but it's ready to break above of it. And of course, this should give you not an opportunity, but this could, let's say, call a more pronounced swing higher for the dollar yen from, of course, from a technical point of view, because we are still trading above immediate kind of uptrend line located at 108.20. As regarding the cable, we already told a short story about this currency. Probably it's time not to be in favor of huge buying in this currency because of political situation, and as well as because a lot of analytics predicts that quarter 2 could be we could see a shrinking in the gross domestic product numbers. Altogether, this of course should put aside the possible interest rate hike from the part of the Bank of England. As regarding dollar Swiss, we should understand, of course, the risk aversion alternatives, but of course now dollar Swiss in the upside move because of a stronger dollar and because of the market expectations of lower, let's say, a likelihood of interest rate cuts in the United States. That's why the dollar Swiss is looking strong at the moment. But of course, as we told a lot of times, not everything here is so clear for a possible move further to the upside. And first of all, that we're still trading below moving average 200 daily line that's located today around 0.9981 and a half, altogether with a kind of psychological resistance around the parity level. Altogether, this should also limit the possible upside in the dollar Swiss. As regarding the euro crosses, here is nothing to say. Probably the euro sterling is a little bit higher, and that gave us a chance to sell the currency, but to be the truth, we are not so welcome. we are not so well, so nice for this type of positioning in the euro sterling, because we suggest that it still has some room for the further gains. There is only one barrier and one, let's say, advisor for our short positioning in this type of parity, and that's a longer term downtrend line that's located around 90.40. That's probably should give you a chance to sell the currency for the stop above. Euro Swiss, nowhere, let's say the truth. We still have a short position here, a little bit a long one, but we still suggest that while below so-called downtrend line located at 112.75, the pair should remain under the downside pressure. As regarding France, as regarding commodity block of currencies, first of all, we were stopped profit from our existed long position in the Australian dollar, but at the same time we enter a long position in the New Zealand dollar. Let's see the New Zealand dollar situation. The New Zealand dollar is around 66 now, and because of stop loss on the break below 66, the pair even plummeted to the level of 65 overnight. Anyway, here we suggest that the pair should remain more or less supported, and we suggest that the current plunge lower should give you an opportunity for a medium-term buying. Of course, from the point of view that the United States dollar could go lower as a result of today's Federal Reserve Chief appearance. As regarding dollar Canada, probably another important and interesting currency pair today, because together with Jerome Powell testify, also today is the Bank of Canada rate decision. And the market expects that probably the chief of the Bank of Canada, Mr. Powell, could be a little bit more hawkish in his rhetoric, and that should give you a chance to further chase the dollar Canada lower. That's because from technical point of view, first of all, we are below the level of 132.50.60, where lies current downtrend line. And don't forget that the Canadian dollar is a stellar of this year, probably one of the least of the most powerful currencies against the United States currency, because starting from June, as you know, from the end of May, the pair made a kind of good move to the downside of around 4 big figures. And finally, a few words about exotic currencies for those of you looking for any kind of opportunities here. Now we don't speak about Bitcoin, which is quite unpredictable and still on the upside trend, but here the situation is interesting, for example with dollar Turkish lira, where we still have a long position. Thank you, ladies and gentlemen. We hope that today's analysis was useful for you, was interesting for you. Thank you, take care, and see you later. Probably in the evening we will come with another updating report in case of big fluctuations in the currency market as a result of Jerome Powell appearance in front of the House Representatives Committee. Thank you, bye bye for now, and take care.